Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for November 5th, 2023. I'm filming this really early, actually, much earlier than I normally do. It's on a Friday afternoon after market close because I'll be traveling on Saturday for the day, so I won't be able to film tomorrow. So I thought I'd film it early, so there you go. I also wanted to say that I'm going to give you a new format of the week ahead video. And please, down in the comments below, let me know what you think of this new format. At the very end of the video, I'm going to give you my best 3 setups. Some of you don't want to listen to a 20, 30-minute video of everything that's happening in the week, and you just want to get to the good stuff. If you think that's the good stuff, I'm going to leave it for you bookmarked right at the end of this video, so check it out. And again, leave in the comment section down below. And by the way, don't forget to subscribe to this channel. If you don't subscribe to this channel, you're not going to get all this exclusive content each and every week that we've been doing for 7-8 years now. So anyway, let's get to it. Let's talk about what's happening this next week. Well, first of all, let's talk about what happened this last week, and then I'm going to get into the charts and everything else. So the question everybody is asking is, wow, where did this rally come from and how did it happen? And I was talking to a gentleman on Twitter, and I'm like, well, the BOJ basically kicked, the door open, or cracked the door open. The Treasury, they opened the door, and the Fed just knocked the door down this week. And then it's obviously the data just kept the party going all week long, all the way into non-farm payroll. So, when you have the BOJ, the inaction of the BOJ set us up with a Nikkei article that, led us to believe they're really going to start tweaking yield curve control. The market got really excited. Obviously, when the BOJ came around, they didn't really, they gave more flexibility to yield curve control, but didn't do much. And the yen weekend, equity markets, they kind of stabilized. They liked it. Then the next morning on Wednesday, the Treasury issued their, issuance report, I guess is what they're calling it. I forget exactly what the term is. But, the Treasury basically is issuing less longer-term debt, more short-term debt, or, let's see, bills, bonds, notes. So bills, more bills, less bonds, more notes, and shifted away from that longer term supply. And that really relieved a lot of pressure off of the 10-year yield, 30-year yield. And you saw those charts reverse because yields started coming down. The markets took solace in that and started rallying. Then we got the FOMC where, Fed Chairman Powell basically said, we're going to just, he came, it was a lot of little dovish tweaks, but more than, the market walked away saying, look, the Fed's going to keep rates unchanged. It might be for a while, but they're not raising rates anymore. People were expecting that, even though he still leaves the door open, but still I think everybody walked away thinking, okay, well, the Fed's probably not going to do anything. And so the markets rallied from there. Then you got economic data that really supported what the Fed is saying with, bad data. I wouldn't say bad data, not as good as forecast, but not collapsing. So a lot of traders called it Goldilocks data. I mean, it really was. It wasn't really horrible data. It's not as good as expected. So the trend is moving down, but gradually. All of that fueled an equity market rally. So the question that you probably have is, can it last? Well, the market was ripe for a squeeze, and we got it. So we're going to get to the charts here, and we're going to talk about that. As we do get into the markets, I do want to say that this weekend, if you live in the United States, and actually I think there's a lot of, anyway, we have daylight savings time, actually, because I know a lot of the world switched last week. So we'll be back on our normal schedule for those of you that listen to our free shows. And by the way, I don't know about you, but I'm sleeping during the Flow Show. If you guys don't know what the Flow Show is, that's a European broadcast from Ryan Littlestone and K-Man. I got to listen to the tail end of that every morning for this last week. It was so nice. If you want to get prepared for your trading day, listen to the Flow Show. Then obviously listen to us on the Face Show. That's the free show that we have every morning. So you can get my updated views and the rest of the team's updated views throughout the course of the week. Dale Pinker brings in some of the best guests, hands down, So make sure you're there. Okay, back to the markets and back to what we're thinking here. So let's go into the charts and let's talk about like the schedule. You can obviously read a lot of the analysis from here. That's still up over the weekend. We update this throughout the weekend, so I'm going to get into the live charts, and we'll start with Sunday night. UEDA, and actually I want to pay attention to a couple of these yen pairs. UEDA is speaking this evening. Sorry, it's late on Friday, so you have to bear with me if I have some talking mishaps and fudge my words a little bit. So it's late in the week. UEDA is speaking on Sunday night. There's also meeting minutes that are being released. I'm not so worried about any of that, and the reason why is I don't think UEDA is going to say anything different than he said just like literally a couple of days ago. But that doesn't mean that we can't get further yen weakness, and we have to pay attention. Like, this is the Aussie yen. I want to show you guys just some big charts that are happening here. This is the Aussie yen, and you could say we're breaking out, you could say we're damn close, but take that, go all the way back on a weekly chart, and let's go. Keep going. You see what I'm doing here? This is a weekly chart, right? You got some major resistance coming in right around current levels. You have to go through some wicks here, but you can see the overall trend. Basically what I'm showing you here on the Aussie yen, and this is not one of the setups, but I'm just covering this for you, is you don't want to see that above here if you're short. Because if you're short and you start breaking above this, like whatever the high is, 99, 99.12, 99 yen, I mean, next thing you know, we're trading at 105, and you're gonna blink and go, "What the hell just happened with the Aussie yen here?" But all these yen pairs look very poised to go. I actually had a short in the New Zealand yen off of a very long-term trend line as well. I covered it because it's hard to stay short these when you have markets rallying substantially and in your long yen. So you can see that the New Zealand yen popped back up, and I'm like, yeah, I'll just take it off for now. It doesn't mean that it won't turn lower, but you can see all these yen pairs are getting quite strong. All right, anyway, UEDA speaking Sunday night, which should be, Sunday night, Monday morning in Japan. So come Monday, we're going to have Canadian IVEY PMI. Now, we have to watch the dollar Canadian because a little bit of risk here with the dollar Canadian is we're not able to break out of this, what looked like a big flag pattern breakout. We talked about it last week ahead video about this 3 drive that Dale had brought up, kind of overshot it and then reversed, obviously, because it was a big dollar reversal. It wasn't like, this is some Canadian news and it was, really bullish the Canadian dollar. No, it was just very bearish the dollar. The BOJ, Treasury, FOMC, data, that all just weighed on the dollar across the board. You even saw weaker Canadian jobs report on Friday. Didn't friggin' matter. The Canadian currency still strengthened against the dollar. So just shows you how weak the dollar is going into the end of this last week. Now, what I'm going to say though, and let's get rid of this, and I make these adjustments for you guys. Let's take that off and let's take that off. Okay. If you draw a trend line across the lows here, where's that going to get you? Not too far from where you're at. Now, I would also argue that this is potentially a channel that we're dealing with. Now, if you go from low to high, you'll notice that we're probably pretty close to 38% retracement, not too far away. So if you guys are looking for some support in the dollar Canadian, if you're looking for some support in the dollar Canadian, I would be looking down here towards this 136 level. I would think, you see the really big red candles. Big red candles are usually followed by other big red candles, but we've seen a pretty aggressive sell-off this far. There's a good chance that we can find some support between the 50 DMA and the 136 levels. So just a little heads up, especially with the IVEY PMI that comes out on Monday. Now, there's not a lot of data this week, so I'm going to stop here and just say this. There's not a lot of data this week, but there's a lot of key levels being tested, broken this week. So we are going to be going through charts. I'm going to be taking you through some of the major indices and whatnot too, because I do think they're going to be really important. Make sure you look down below you'll see a bookmark. At least on Sunday, you'll see a bookmark of all the different chapters of this video, so you can kind of skip along and find the ones that you want to listen to. All right, continuing on. So on Monday night, which would be Tuesday morning, this is a big one. We have the RBA rate decision. Now, when you're talking about the RBA, this is a point I made on Friday, and if you were on the Face show, I got long some Aussie dollars right as the jobs report came in a little weaker than expected. I knew it wasn't super weak, so I was ready to buy Aussie dollars. I bought Aussies, sold them out already. But the point that I made on Friday, and I think the rest of the team agreed, is the Aussie has been holding up exceptionally well, and that's going to come up. It's going to come up in some of the best setups going into this week. But what I want to point out here is that when you're dealing with the Aussie dollar, you have an RBA rate decision on Tuesday, and the RBA is expected to, well, actually, I take that back. The RBA it's a toss-up whether they raise rates or not. Now, Chris Weston from Pepperstone, I meet with him every week to do the trade-off show. He believes that the RBA is going to raise rates. I think market pricing is over 60% chance that they're going to raise rates. So what does that mean? Well, if there's a 60% chance that they raise rates, that means that A, they could raise rates. B, the market reaction is going to be really pretty strong if they don't raise rates. But C, the other thing we have to take into account is what do they say about December? Because there are risks that the RBA may keep rates unchanged here, but raise them 50 basis points in November. Sorry, I'm trying to think. I was going to say in November. So there's a few moving parts here that we got to look at, but price action wise, you can obviously see that the Aussie dollar is not backing away, and it has been holding up very well despite the sell-off that we've seen in risk. So let's remove these old drawings here since we're getting a reversal, and let's see where that 38% retracement because I'm assuming we're on it. And you can see that if we break this 38% retracement, the next stop, and let's just take this black line, I'm going to reuse it. See, I recycle. That's good for the environment. I recycle my chart lines. I reuse them so I don't have to get you new ones. And, see, if you don't think I'm green, I'm green. I'm green. You see that I'm green. I'm reusing my line. Look, I'll even reuse the zeros, the little circles here. We could even go there. What do you think about that? Maybe I'll use this one too. That's if we break this one. We break this one, we go to this one. Look at that. Green. Yes, be green. Recycle. Okay, anyway, you guys get what I'm saying here. Is if we break above this 38% retracement, previous support should act as current resistance. You can see it's a pretty high traffic area here. When I say high traffic area, that means that, you start getting up in these areas and you can see that we spike above, below. It's a zone, right? So if we break above this 38% retracement, we could see all the way up here. And then look, the 200 DMA is just above that too. So the reason why I'm mentioning all this is because we do have the RBA. Now, there could be a massive disappointment too with the RBA it's Monday night, right? Yeah, Tuesday morning. So that's the risk as well. All right, staying with what's happening throughout the course of the week. On Tuesday, not a whole lot of data. Like I said, this next week is really sparse with data. A lot of central bank speak. Not just I like to say Fed speak, but it's not just the Fed. There's central bank governors all over the map that are speaking. Now that we're past all of these meetings, now everybody is talking. So Lagarde speaking this week, Powell speaking this week, Waller, Bostic, you get it. They're all speaking. So I'm not going to name all the meetings off, but there is a few that we need to pay attention to. But going into Tuesday, not a lot happening. But Tuesday night, which would be Wednesday morning in New Zealand, we have New Zealand inflation expectations. Now, what's really interesting about the Kiwi is the Kiwi did show a pretty big reversal. It had a bear flag and now it's reversed. The thing is if you've been listening to the Face Show and you see my other charts that I use for, the Forex analytics community exclusively, when I'm doing the chart analysis, we hit 127% extension. You can see it right here. Let's go over to the Kiwi dollar, and you can see we had a 100. Whoops, I got to go into earlier charts. We were developing from the 127% extension. We were developing a triangle, and then we broke higher out of that triangle, and then we hit the 50 DMA. You can see, so it's just like completely setting up for a reversal. Now the question is, how far can the Kiwi squeeze higher at this stage? Because we have gotten a nice reversal. So I'm going to delete some of this stuff here, and let's see how far we can actually go with this Kiwi, because we have New Zealand inflation expectations Wednesday morning in New Zealand, which will be obviously it's Tuesday night if you're in North America. Now the thing is, I'll take this most recent drop. If you think about what's happening in Australia, and one of the reasons why Australia is going to continue to raise rates is because inflation remains very sticky. New Zealand, we may have a very similar issue. That's why these inflation expectation numbers are really important, because if New Zealand says, the inflation expectations come in hot or sticky hot, can we go even further? And I would argue probably, because this is a pretty big move here. And then you have to take into account what's happening with risk also, because the Kiwi and the Aussie are still risk currencies. They tend to move when risk assets move. So we're at the 38% retracement. The next stop could be above this horizontal resistance to the 50% retracement. And that, to me, would make a lot of sense of something that we might do in the Kiwi. So just keep that in mind. All right. On Wednesday, there's not a lot happening, but on Wednesday night or Thursday morning, if you live in the U.S. Or in the North America, or in the Americas, we have Chinese CPI. So it's Thursday morning in Asia. We have Chinese CPI and producer prices that could also influence the Kiwi and or the Aussie as well, and probably is going to be the biggest driver going into the middle half of the week. On Thursday, we have Lagarde speaking. Now, I want to talk a little bit about the euro dollar, because the euro dollar, as you can see here, we had this flag pattern drawn out. Now, Lagarde speaks in Brussels. I don't think she'll be a big factor, because later that day, Thursday morning, Fed Chairman Powell, he speaks at an IMF conference. And so when he's speaking at this IMF conference, it's more than likely going to move the dollar, not so much the euro. There's a lot of euro data, like ancillary data, that's coming out throughout the course of the week. But I think the big driver of the euro is going to end up being the dollar, since it's such a big part of the index. And we have Powell speaking. We have big move in bonds that we're going to go through too. So anyway, just giving you a heads up. But if you look at this euro, we are challenging that flag resistance, right? But the flip side to this, and one thing that you didn't see, but it's something we've been looking at, here inside the Forex analytics community. You can see the triangle pattern that has been developing. Whoops, let me see if I can find it for you. The triangle pattern that was developing right here, we broke out of that triangle pattern, and because we broke out of that triangle pattern, there could be some further upsides. You got to think about, the euro and the risks that we could continue higher at this point. But I will say that the euro is underperforming when you're talking about, a lot of the dollar pairs. The euro is just, not acting the best. You could see a big rally in the sterling, where the euro, not so much. Now, speaking, well, I'll get to the sterling here in a second. But on Thursday, one of the other big things that are happening is we have Mexico CPI, and we have a Banxico rate decision. And, people are going to be wondering if Banxico has been talking any more about rate cuts. And so even though no one's expecting a rate cut, everybody's expecting Banxico, or most analysts expect Banxico to stay on hold. The question will remain, are there further talks about cuts? Now, what we can see here with the dollar MEX is we have a double top, slice through the 200-day, through the 50 DMA. I tried to buy it a couple of times. Once, I think yesterday, I bought it today, following the Fed, and I had some long earlier this week, let it go for a loss. So the dollar MEX, but it's fallen really aggressively, more aggressively than I thought it was going to. However, if you look, let's go ahead and draw a fib here. We stopped at the 618 retracement at the 1733.34 level, 161% extension, right? And also a 78% retracement of this move. So we talk about triple confluence. I actually tweeted about it on Friday. So if you follow me via Twitter, you saw that. And that was the reason why I picked it up for a bounce. And it outperformed the rest of the dollar pairs right after it hit that confluence of support. But I think that's going to be important going into next week, because if risk assets continue to rally, if Banxico didn't talk about rate cuts, we could see the US dollar Mexican peso slump a little bit further. But I want to stop and talk about something really quick before we go any further, because this isn't one of my setups going into the end of the week. Going into the end of the show, into the end of this video. Blah, 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 Friday afternoon. I still look at the dollar Mexican peso as trying to forge a longer term low here. So, in other words, even though we hit channel resistance, is big resistance, right? I still feel that the dollar Mexican peso is doing this, okay? Doesn't mean though it's going here. I just think we're basing. We're going to continue to base here. Now, the reason why I'm going to say that is because if you take a step back and you think what Banxico is doing, and one of the things that gave us the big green light right here to start buying pesos, or was it right here? I can't remember which one it was. But was when Banxico said that they'd removed their emergency facility, what they had incorporated during COVID, right? That was really the primary driver of this move. Right, so when they reversed that course, the dollar Mexican peso turned around. That is a big deal, because if you think about what the impact of that program has been, right? The impact of this program over the course of the last couple of years, for them to reverse that, I think has a bigger impact than just what you've seen thus far. In other words, I still think there's more to go. Also, with that being said, when you have a lot of other LATAM countries and central banks that are cutting rates, that's going to, and Mexico will probably be one of the first central banks here in North America, if you're talking about Canada, Fed, FOMC, United States, and then Mexico. North America, Mexico is probably going to be the first central bank cutting rates as well. So with that being said, I do expect the dollar MEX to find some sort of support down here around the 17 level. So somewhere in this neighborhood, I'd be looking for it to find support. And so just keep that in mind as we go forward into the end of the year. Okay. All right. Continuing on. So we have Banxico on Thursday. On Friday, going back to the UK, we have UK GDP. Now, it's kind of scary because we finally broke out of this wedge. We were talking about this wedge pattern, right, last week. We finally broke it. Andrew Bailey didn't sink the sterling. Everybody kind of laughed about that. We broke through the 50 DMA today, on Friday, and almost hit the 200 DMA, all in one day. Now, here's the problem. As we go into the end of this next week, UK is going to be reporting GDP, month-over-month GDP, which the analysts expect it to be flat, basically. Advanced GDP, quarter-over-quarter. Advanced GDP, negative 0.01%. So, you know, when you really start to hear people talk about stagflation, when you have high inflation and then no to negative growth, this is why it becomes a risk when you're talking about the cable, especially after such a big rally. So UK GDP data Friday morning, I think, is going to matter. So if you are trading sterling, just be really careful, because we've squeezed, and we've squeezed pretty good. Now, also take a look. Let me go ahead and go to these highs. Let me make sure I'm right at those highs. Right? 38% retracement comes in right by the 200 DMA. Okay, so what am I saying? Oh, there's probably going to be a lot of resistance around this level. So if you're long sterling, just be careful, because it's been a great rally, especially as of Friday following the jobs report. If you were on the Face show, you know. Last but not least, for Friday, we have Norway's, well, that's not last but not least, but we have Norway's CPI, PPI. Now, I want to talk about the US dollar Norwegian krona a little bit here, because I think it's worth discussing that the US dollar Norwegian krona has been very strong. Now, I think it's reversing, but we have to see some broad dollar weakness, because this little sell-off that we've seen in the US dollar Norwegian krona is nothing in comparison to the dollar moves that you're seeing across the board. Aussie, sterling, euro, you've seen it. We've just looked at all the charts. Norway's barely even moved. And CPI is still hot. I think, let me make sure I got the numbers. Consensus is looking at 5.6% year over year, coming down from 5.7% year over year. I mean, come on, you know, that's CPI. I mean, you would think the US dollar Norwegian krona should be a lot lower by now. And, you know, maybe if that inflation data comes in hot again and it's sticky, then maybe we will get that fall in the US dollar Norwegian krona. I will tell you this much, though. Same thing I've been telling everybody on the Face show. We get above 1130 here, you don't want to be short. Because for whatever reason it is that the US dollar Norwegian krona is holding up so well, it is. And, you know, price doesn't lie. And in this case, you have to, you know, keep that in mind. Okay. Now, the last thing that we'll have, and let's just take a look at the dollar index. The last thing that we have at the end of the week, again, not a lot of U.S. data. Oh, did I talk about Powell? Oh, yeah, he's speaking at the IMF conference. That's what that's on Thursday. Just make sure I mentioned it. I know I was going to mention it, and I can't remember if I mentioned it, but he's going to be a potential mover on Thursday. But Friday, okay, we have consumer sentiment and inflation expectations. University of Michigan, you know, it shouldn't be that big of a deal, but given the move that we've seen in the dollar, you know, could that allow for the dollar to continue to pull back? Now, this is where I do expect the dollar to pull back to. If we're going to pull back, we're going to pull back to the channel breakout point, which will be right around 104. The 200-day moving average, by the time we get there, the 200 DMA is going to be up a little bit further. So we did close below the 50 DMA. The flip side is, and I should also mention this too, one of the reasons why on Friday the dollar was so weak is Hezbollah had a press conference, and, you know, without getting too deep into it, basically they called the US, UK, and Israel, oh, I forget what the terminology they used, like the barbarians, right? Aside from using just some wording like that, they basically said to the rest of the world, it's our fight. It's a Palestinian fight. It's our fight. And so the market took that as not a de-escalation, but okay, maybe it won't escalate beyond what we're seeing right now. It's going to be an Israeli, Hezbollah, you know, Hamas, or is it Hamas or Hezbollah? I couldn't remember again, it's late in the day on Friday. You can all correct me if you want. That press conference. Anyway, what I'm trying to say is that the market didn't feel that this was going to grow, any further than, it is right now. So anyway, that was one of the things that weighed on the dollar. So we saw the dollar slump, not only the jobs report, not only the CPI or the PMIs, ISM, that came out on Friday, also that press conference as well. But look at the dollar. We're still at flag support, right? We're still at flag support. Could the dollar reverse course and start to rally from where we're at, where we closed on Friday? It could, if things took a turn for the worse over the weekend in the Middle East, potentially. But realistically, it looks like to me that we will break this flag pattern and probably move down to the 200 DMA. Okay. Anyway, that is it as far as the weekly stuff. Let's go through some other markets. But before I do that, let me just say, hey guys, if you haven't checked out Forex Analytics, make sure you do so. It's only $1 for 10 days. Try it out. Okay, $1 for 10 days. And, one of the cool things, you see the platform and you see all the tools inside the platform, Live Squawk and the risk management tool and all the analysis, all that fun stuff. But what's really cool is the heartbeat of our community. This is me, right, this morning. And I'm just going to show you how much, this is Friday morning. I'm going to just show you how much chatting goes on Friday. Now, this is a Friday. Most people will be like, wow, it's Friday. And this is our community, guys. This is just about the markets, right? Charts, analysis, people's points of view. Now, you want to also talk about conversations. You go into conversations from just today, and you can go deep into, the links that we posted on YouTube to, Nick talking about what he's seeing in the charts, to, DK Trader, and then follow-up charts after that. This is one of the most active communities in the markets. So get involved. It's $1 for 10 days. Try it out. And you can also access Forex Analytics, have part of the trader funding program if you want to learn how to trade larger amounts of money and not risk your own money. So check out the trader funding program while you're at it, because then you'll get Forex Analytics included with that, because we want you in our community when you're going through the trader funding program. Okay, I'm going to continue on, and let's talk about some of these other markets. Let's talk about the S&P. Now, the S&P, let me find the chart here. So we answered that question from last week. How much lower until the S&P can bounce? Well, we bounced. And we bounced like a bat out of hell. All right. Now, the thing, and these flag patterns never complete, or the ABCDs didn't complete. But what did complete, guys, just, because we talked about it, weeks ago, was the head and shoulder pattern, from the neckline. They look like that, right? Because this is a, just so you guys know what it's called, this is the first time you're listening, and you go listen back a few weeks ago so you can hear this. This is a complex head and shoulder pattern, right? With the neckline that looks that way, right? So we reached that target, but it looked like there was going to be further to go. Obviously, what happened throughout the course of the week changed the composition of the market. The question is, how far is the S&P going to bounce? Well, this is what I think, and this is just something we were talking about in our community, because we closed on the highs of the week. And just remember, this weekly candle, that is a up in your face, piercing line, Marabuzzo candle. That's got further to go next week, more than likely. Like I said, unless something happens over the weekend that's unexpected, chances are we're going to continue this rally. Question is, how far do we go? And I'll say this, that when you're in a bear market, having these rallies tend to be really sharp, and they tend to be pretty brutal. So when you can break through resistance right here just further enough to stop at a 618, That seems very logical to me. So if we get up to the 4420 level in the S&P, I think we're going to find some resistance there. If we can break that, and there's reasons for us to break that, we should trade up to 4,500. So I think that these are two levels that we need to be looking at going into this next week. And if you just look at this whole move, and let me just draw this out for you. You look at this whole move, we just came right back to the scene of the crime, right? That's all that is. And still, in essence, making lower highs and lower lows. But could we get a rally that extends us that far? It's entirely possible. So don't write off the market. Not yet. But there's a couple other markets, that I think are important as well. Take a look at the NASDAQ 100, because the NASDAQ 100 just reached channel resistance. And that's doing it with Apple being down on the day on Friday after Apple earnings. So just, realize that, it looks like the markets can continue, but, when you have a big index that everybody's looking at, like the NASDAQ 100, I know it's not the composite, but a lot of people, look at the NASDAQ 100. We're into resistance here, and don't discount that. I think it's rather important to pay attention to. Taking a look at the Dow. The Dow basically, here, let's get rid of me first of all. Let's do that. You can see that the Dow, false breakdown, right? Basically hit a 50% retracement. We rallied back, and I'm just gonna say it if you don't see it. This is a very high traffic zone in the market. See, a lot of highs get rejected up here. You can go all the way back over here too if you want. But you can see a lot of rejection, a lot of consolidation around these levels, rejection here, rejection there, right? We could probably reach for that, that's a 4-hour chart, so let's go on the daily chart. There's the daily. We're at the 200 DMA, 50 DMA. Maybe reach a little bit higher, but we're going to find some resistance up here. So just, you think about where the NASDAQ's at, where the S&P's at, the Dow, looks like we can go a little bit further. Then the market's going to get into a, what do we do situation? Like, what do we do with this? Now, I'm going to go into gold, but I want to go into bonds first. Let's talk about the bond market, and let's just talk about the 10-year, because I blogged about it on Thursday, but we got this rally outside of this channel. But look at, by the end of the day, we closed back in the channel, and look where we rejected. So if you think about this, think about like that Treasury issuance report on Wednesday, right? Janet Yellen and the Treasury, instead of issuing more, bonds, or as many bonds and notes, they are issuing more bills, shorter term debt. So kind of, instead of issuing so much over here, they issue a little bit less over here and a little bit more in the shorter term stuff, right? But they're still issuing a lot of debt. It gave the market a good reason to squeeze. Yields came down, we got a squeeze, stocks squeezed, yields came down, bond market squeezed higher, TLT rallied, but we just hit previous support, which does act as current resistance. Now, in the event that we break above that, then I think it really opens up some upside. So in other words, I'm going to go green. If you break that level, next thing you know is you're trading much higher in the bond market. Yields are going to come down, and that, surprisingly, may really support stocks, because the bond market is not being used as a safe haven asset right now. The bond market is moving based on what's happening with yields, real yields. Okay, so just keep the bond market in mind, and then also while you're doing that, take a look at gold. Gold is consolidating, not too far off of its 2,000 level. Now, gold, if you ask me, is not convinced that this look, I'm going to recycle. So gold's not convinced that we got the all clear in the Middle East. I think while we're above 1950, this move right here that you see here looks very impulsive. So this may be some sort of consolidation. before we see a resumption of trend, because it was such a strong move that, and we're not backing away. So price action remains really bullish from here. All right. Now here's the time of the video where I'm going to give you my best setups of the week. So let's start with the first best setup. Number one, this is going to be the Euro Aussie. Now, the reason why I want to talk about the Euro Aussie is because there's a lot of people in our community that are focused on it. I've been trading in and out of it. Traded it kind of poorly the last couple of weeks. I was expecting a little bit bigger move, trying to work a core position higher right through here. And it's just, obviously because risk appetite came strong, it started to slump. Now, and I'm gonna preface it with, there's two types of traders right now. You are one of two. You are a trader that believes that the stock market is going to continue to rally, climb the wall of worry, and just continue to rip higher. If that is you, and that is your perspective on the market, which is fine. I mean, it's good to have a bias in the market, but if that is your bias, keep your eye on the Euro Aussie, because if you take this, that's not the long-term one I wanted to look at. You take this support long-term, we're about ready to break through support. So if we break through support in the Euro Aussie, I think it'll be a result of stocks continuing higher, and we might actually trade quite a bit lower from here. So if you start looking at where, targets might be, you get below the 200 DMA, you might trade down to 161 or something to that nature. So I think the Euro Aussie is a really great setup if you think that stocks are going to continue to rally, because if stocks reverse, different things may happen. So let's talk about my next best setup of the week is going to be the Euro Dollar. Now, I think the Euro Dollar is bearish. Now, I know looking at it, you're like, oh, wait, so you think this bear flag's going to hold? Not necessarily. I think the Euro might go a little bit higher. Do you see previous support right here? You see that level? Do you see how it also coincides pretty close with the 200 DMA? Do you know what else is right there? You got the 38% retracement and then the 50% retracement. So I believe that somewhere between here, let me grab my drawing tool that I want, which is what I have right in my hand. What I believe is somewhere right around here is going to be a good level to sell the euro. And my colleague Dale Pinkert, he's been saying 108. And the 200-day moving average is right at 108 or just slightly above. But I think you could go even a little bit further than that to 108.50. And that might set up for a good reversal. So what I'm trying to say is one of my best setups for this week is if the euro can get back above 108, I am looking for a short. If we can get back above the 108 level, I am looking to play the dollar back to the long side. That would participate or end up doing better if stocks stalled later on this next week. Okay. And now my last best setup of the week would be not any currencies, but I want you guys to keep an eye on the German DAX. Now, I don't typically trade the DAX, but I know a lot of you do. And here's the thing, is the DAX had a nice reversal off the 38% retracement. We're approaching channel resistance. You can also see the 200 DMA, but more importantly, previous support comes and coincides with that channel resistance. So I think that the DAX is going to struggle when we get back towards the 15,004 to 500 level. Now, I want to point out that the Eurozone is not in good shape. And as we go into this fall, as we head into winter, there are still risks of disruptions, whether you're talking about Russia and Ukraine, whether you're talking about, energy from the Middle East, there are still risks. And if you look at Germany, this is the DAX, right? The German DAX. You look at Germany, the growth engine of Europe, PMIs are still really, really contractionary. So the German economy is probably struggling a little bit here, and the indexes are showing that they are. So I think, you know, somewhere between this 15,400 and maybe up towards the 200 DMA, kind of like you saw a spike right here. You might get a similar spike like that right here. But I think somewhere up in these levels, you know, looking for a short in the German DAX, once the US equity markets stall out, I think that's going to be the play. So guys, gals, I want to say thank you for being with me. Also, if you can provide any comments, any feedback on this new setup for the week ahead video, I would greatly appreciate it, myself and the rest of the team. And speaking of which, for my team getting this out this weekend, give them a big thumbs up. Hope you all have a great weekend. I'll see you Monday morning on the Phase Show. Remember, it's a free show. Get there and get to the Flow Show as well. Have a great weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.